the imbalance that has happened here, even between commodities.
Hi everyone, this is Matthew Kruse at Comstock Investments. I have with me the founder of Comstock, David Kruse. I want to talk a little bit here this morning about the divergence in what we're seeing between high prices at the grocery store and the exact opposite with lower farm gate prices. And so, David, what's your thoughts on that? What are you seeing?
Well, I happen to be the one in our family that does most of the grocery shopping, and I've done it for a long time. And so I like to do it because it does give me some data, I guess, as I look at how the prices change on what's going on in the grocery stores. I follow the meat counter pretty hard and everything. And so I get the idea what the consumer is it being impacted. And I think right now you can go on YouTube and find quite a few videos that compile the consumer reaction, I guess, to the grocery prices. And what this alludes to is that since about 2020, the data would suggest that the grocery prices are 30% higher. And from my own experience, I think that's understating it. It seems to me that it's a lot worse than that even. But I suppose it goes commodity to commodity and what type of foods that you like or you like to purchase. But everyone's seeing some sticker shock right now at the grocery store. And so it's kind of like 30% higher when a bag of Lay's potato chips costs $5.50. Something's really changed.
Well, this chart kind of shows what grocery prices have done in the last 5 years, and you kind of see where they started out there pre-COVID and now where we're at post-COVID.
Well, you note that this comes from the Bureau of Labor Statistics. They're really good at revising things. They revised your jobs number down. I think that someday we might see that they have to revise this one up. But anyway, there's been a significant change higher in food prices since 2020, and really, at this point, it isn't showing any inclination of that changing. One might ask why. Well, it certainly is in farm gate prices. It isn't what we're getting for what the farmer's getting. They aren't contributing to this. They're in actually hard times. You know, a lot of times what we're seeing, low oil prices right now. Well, that's been blamed from time to time on high grocery prices too, because the transportation and processing, there's a lot of energy that goes into that. One of the, I suppose, or maybe the two primary things would be trade and immigration. When you are eliminating, and they think they've probably over 1.5 million undocumented immigrants have left the country. Well, that does start to tighten that end of the job market because they're the ones that are working in this food chain. So labor costs start to increase. And then also there's some impact from tariffs as well on certain specific commodities.
Just to clarify something. So, I mean, a lot of this increases, this is going back to 2020. And so a lot of these tariffs have started here just in the last few months, and so it seems like it's been a longer term trend than that.
Yeah, you're right.
Tariffs don't explain all of it. Maybe they're going to accelerate it quite a bit. In times like these in the farming economy, everyone complains about consolidations and monopolies and things like that, but the truth is all that has been happening for a long time. It's just when you have low periods like this, it all just kind of accelerates and then people complain more about it. But what happened there in COVID to make things get worse, and the lack of labor pool is primarily responsible?
Well, you know, there's a divergence here between food prices and maybe inflation in general. And we saw a significant softening of inflation since that prices spiked and stuff with those previous events of COVID and the Ukraine deal. And a lot of prices have come down, but not the food prices. So there is something more going on here relative to that. I haven't followed the margins of some of the major supermarkets and stuff, but it would seem as though that they must be doing pretty well right now.
So we picked out a few commodities here: bananas, beef, and coffee.
Yeah, Bill, first of all, I think the coffee situation, that would be mostly, you'd probably be a better expert on that, having some experience in the coffee industry. But I think there was some weather issues or whatever, Brazil initially, was there not? So there was concern over supply.
Well, supply has been tightening for the last several years. Demand has been strong.
Yeah.
You know, was it last year, Vietnam is the second largest producer of coffee. They got decimated by a drought. Brazil's crop has been okay, but it seems like it's consistently been a little bit below what they were expecting, and that's just kind of added up here. And so when you enact these tariffs at a moment when the global stocks are tight, you know, the prices just explode. And was it last year or 2 years ago we saw a record in cocoa prices, and now that's being followed by a record in coffee prices. We've set a new high price on the global exchange for coffee prices of all time, going back to over 50 years ago, back to the 70s. And now we're doing the same thing, and it seems like in silver and gold, a lot of things. And so just tremendous amount, a lot of volatility out there. But back to the coffee, yeah, when you put the tariffs on top of that.
Give up on Brazilian coffee when they
Yeah,
were.
yeah. So almost 40% of coffee in the world is produced in Brazil. And they consume a lot, but not enough. And so they're exporting a lot of it. And a third of the coffee in the United States has come from Brazil. And so there's a lot of coffee in the world, but it's all in the wrong place. And it's all kind of stuck in Brazil right now. And all these importers don't know what to do with it. And so it's causing a tremendous amount of financial damage. I would say there's a lot of small businesses, coffee shops and roasters that are going to go broke over this, or at the very least suffer tremendous financial damage. Meanwhile, coffee growers around the world outside the United States, have never seen prices this high before. Like, this is a grand slam home run for them. It's like $10 corn. And so they're thinking these tariffs are a good deal, but for consumers, it's going to be devastating. And I can't speak to every different commodity, but in the case of coffee, people don't know what's about to happen. Like, they're complaining about coffee prices went up 20%. They might go up 200% yet. Like, a lot of the tariffs just started enacting here recently, and this price shock hasn't come into the market fully yet. And a lot of people don't get that. They're just kind of crossing their fingers and hoping these tariffs will go away. And maybe they will. Lula and Trump are actually supposed to meet today, about maybe reducing these tariffs. They won't go to zero, but they can go to 50%, drop them to 15 maybe. That would help out tremendously. But, we're at the point where we got to make a decision, and we can't pretend that the tariffs are going away anymore. But that's why you're seeing such an extreme reaction in the case of coffee.
Well, I think that you'll see consumers hang in there pretty good. First of all, I mean, if they're addicted to caffeine, that keeps them coming back. It always seems to shock me sometimes when there's a little Starbucks in our grocery store, and there will be a line of people there waiting at almost any time of the day. I'm really surprised, I guess, at how the consumer hangs in on that. And so I don't know, we know what they will pay. That's a situation. And the next one here is beef, is when you see the price of ribeye, go from a year ago about this time. I think I was able to buy a ribeye for Christmas, and I buy the vacuum pack thing. I got it for like $10, $11 a pound. Well, yesterday I was in the store and it was 18. Of course, that's not sliced and everything else. If you go just buy a regular ribeye at the meat counter, right now that can be anywhere from $25 to $32 a pound. And so far, I guess it's been amazing to me that the consumer has hung in here on beef prices, as they have too. I think that can wear out as time, and if a jobs numbers situation gets a little tougher, and they say high prices are the cure for high prices, and in the case of beef, I think that will be the case eventually. How long that takes to be triggered, it will yet to be seen.
The obvious issue that we see with this is, at the grocery store, the consumers spending all this money, way more than what they used to on groceries, and it's obviously hurting their checkbook. But at the same time, farmers are suffering. And so it doesn't make any sense. But the farm gate prices are going lower and food prices are soaring. So somebody's making money in the middle here. It's not the farmer, and it's not the consumer. So who's making money here?
It's puzzling, I'm going to say, to the consumer, because they go into the grocery store and they're getting this sticker shock, and then they hear right now there's a media blitz about how farmers, they need farm aid. The trade situation is hurting them so bad and such, and they have a right to be a little bit confused. I think that maybe that's good from the standpoint that maybe they won't blame the farmer for the higher food prices. I don't believe the farmer deserves any blame in this case. Obviously they aren't the profiteers when they're in a situation looking like they need a bailout. And so that seems to me that there's a pretty astounding divergence right now in that food dollar between where it's going and between consumers and then against to it. What consumers are paying against what producers are getting for those products. As I mentioned here, obviously all the crop prices have fallen. Usually we have something that works. Particularly in the South, this is an issue right now, because if you can add rice and peanuts to that too, and absolutely nothing they're producing down there out of all that selection of crops that they can grow, is profitable. And so that's why we get a farm crisis. It's probably even a little worse down there. The corn is not profitable, but the loss is less, I would say, than in the case of soybeans and cotton. Our cotton industry, frankly, is at the point of destruction. We could do an entire report on that, but Brazil is basically taking that market away from us. The domestic demand, I think one of the greater places we use cotton now is probably in a Tylenol or a Pepto-Bismol bottle. They're going to polyesters. Actually oil is cheap too on the clothing side. And so we've got a combination of a struggle here where diversification of crops hasn't really worked. Ethanol still makes money and livestock make money. So that diversification is helpful. Very few farmers are involved in either. And so at least these grain farmers. And so we've got a real problem.
I talked to people here in the South that the last several years they've been reducing cotton area and putting it in the corn, and that's been accelerated again here just in this last season. Like they're just getting decimated. And I always looked at the South as envious because they had more options. They could diversify. In Iowa, it's just corn and beans, and there they got the rice and the cotton, the peanuts and other things, and none of them are working right now. In the case of the rice and cotton, it's probably $300 an acre loss, and so it's even worse than the corn and beans. And so what's going to happen is it's going to put more of a shift in the South to produce more grain and increase acres potentially as they basically exit the cotton industry altogether.
Well, these other diversifications, primarily into biofuel or into livestock, are really not there either in the South. What do they have? Broilers, and the broilers are all owned by large commercials. Essentially, they're just caretakers for those broiler buildings. And they don't have the biofuel in the South either that we have. And so they don't benefit from that diversification much either. And it's not that a lot of farmers here own hogs anymore, and the feedlots are a little farther and few between too on the beef side. But those are making money. The ones that are diversifying the livestock are making money. What this is a price index for crop producers. There's a price received by farmers in the dark blue line, and the price is paid by farmers for their inputs, the red line. You can see that since 2022 that the prices farmers receive have gone down, and they haven't recovered significantly, whereas our costs have continued to rise. And so that's where we've lost our margin, so to speak, and there's a loss in farming today. It isn't even breaking even. And farmers who need farm income in order for their living are under real distress right now.
Production costs continue to go up. That's probably what's troubling is a lot of people on social media would point out that price today really isn't all that different than last year. It's just that our costs are higher, and they look like for 2026 they're going to go even higher yet. And so your break-even costs continue to rise, yet we have the same prices that we did 10 years ago.
Well, the fertilizer companies are kind of interested because when corn did go to $7 and there was profitability into it, the fertilizer companies significantly boosted with their selling price. And their argument was, well, hey, the price of corn goes up and we deserve to have a particular percentage of that revenue. And so therefore we should be able to raise our prices too. Well, that is what happened. That's what they did. But now we have the absolutely reverse. And if you use the same logic, fertilizer prices should be coming down sharply because the revenue is that much shorter. If they're going to get that same percentage of the revenue, then likewise, fertilizer prices should decline. Well, that's not happening. You know that full well.
Well, this looks ugly.
Well, it is, as I alluded to, that there's no crop right now, no choice for anything that makes any money. And as I look through it, cotton and sorghum in particular, China has blocked sorghum too, and the rice and soybeans are definitely more tied to the trade on that side. But these farmers are looking for alternatives, like we're seeing cotton acreage decline in the South. Well, it gets shifted to something else. And when you've got too much of everything, you don't need acres coming in. And so it's going to be a real battle this next year. Who plants what? Which loser are you going to go with, so to speak? And I guess you look for the one that loses the most money that way. But
you look for the one that loses the least amount, yeah.
So the Trump administration, they've come with their trade war. The narrative that they've sold is that, yes, we would have to go through some short-term pain in order to but we would get long-term gain. We had to get tough on China, and the result would be that everything would be better thereafter. Well, we've gone into the first part of that, and we certainly have the pain, but right now it's a little dimmer on those prospects for where the gain is going to come from. They're in the process of doing what they call trade frameworks with these other countries. A framework is not the same thing as a deal. What it is basically a term sheet. They get the rough terms of what this deal is going to have, and where they're maybe setting what tariff rate and such they get. But there's a whole lot of details and stuff that are yet to be negotiated. And there's a lot of fine print in these things. And what we're finding in cases, and particularly in Japan and the European Union and South Korea, is after their negotiators came home with these framework agreements, they've hit a whole lot of problems with domestically from a political blowback. And some of it comes from the fine print. Japan is supposed to invest $600 billion in the United States, plus I guess they can use credits and things to do that. But that hit hard when the prime minister got home and he got fired. Now they've replaced him. And they've replaced him with a woman whose job has been basically laid out that she's supposed to figure this out because they don't like the deal they got. In the European Union, it's similar. They had to make a large several $100 million investment in the United States, and then on top of $750 billion in energy that they were supposed to buy by 2028. And so that's hurting when they got back home, and they're getting some blowback from that. In the case of Korea, there was actually a misunderstanding in the framework. Korea was supposed to invest $350 billion in the United States, and they thought this was just like a loan guarantee. And in fact, it was cash up front. And then the deal is that for a few years, well, I guess that we would split the profits from that investment with them until they got their initial investment back. And then it was going to go like 90-10, I guess. We were still going to keep some profits from that. So they were supposed to make investment in the United States that the United States would therefore share the profit in. That went over like a lead balloon in Korea. And then when ICE took down that Hyundai plant in Georgia, our relations have soured. And I'm going to have a report here later this week or this Friday that'll talk about these trade tariff agreements and how I see them as threads unraveling at this point in many cases. And so what we're going to end up with isn't necessarily what was initially negotiated. I don't know when we'll find out what that is. It's going to take a while before this sorts out. He had the first strike, and now the rest of the world is coming back with their reactions. In the case of the two where the most aggressive reactions have been is Canada and China. And that's going to have to be a topic for future podcasts at this point.
Sounds like a full-time job just keeping track of all these trade agreements. Seems like just a hodgepodge mess.
And there's back and forth.
Keeping track of this back and forth. But, everyone's focused on what these tariff numbers are. I mean, I would argue that there are long-term ramifications for all of this that nobody, including our administration, can even imagine or fathom what's going to happen here. The longer this goes on, and I think a lot of damage has already been done, and that's why you're seeing kind of a fleet of gold and drop in the U.S. dollar. And
you're seeing a reorganization of the world economic order, too, as a result. Whereas in cases like Switzerland, always been a good friend of the United States, we throw a 39% tariff on them. They go to try to negotiate a framework, and they can't. They're so far apart they can't even do it. And then Switzerland ends up signing a free trade agreement with China. Right now, there's a similar situation going on in Canada. We may lose Canada to China at this rate is how we've been treating them. And then India, earlier in the year, they were all slapping each other on the back and going to have this trade deal, and that blew up completely. And they're going to be the most populated country on earth. And then actually India then went to Singapore to a meeting with China, and they're getting closer together. So we don't have even a clue how this is all going to sort out other than that it's a mess. And this idea that there's going to be short-term pain, I can actually come up with a scenario where China does not have to buy our soybeans again. If they expand in Brazil accordingly, they do 2 trade deals. They got one that right now that Canada is looking at as far as rate canola to China. Canada produces 20 million metric tons of canola. And so this soybean deal could go on. And the ramifications of that, if we don't need 20% of our soybean acres, what do? We do have some farm bill protection that kicks in next year. They're going to come this year with a Trump, I call it trade aid, ACH. Actually, right now, the word is that they kind of have it ready to go. They're just waiting for the government to reopen again. In other words, and to be able to announce it or to be able to implement it. It will be a significant amount of money. The USDA Research Bureau in early September forecast that the federal government would probably pay the farmers of about $41 billion in total. Well, that is significantly higher than it was the previous year. It does get our net farm income back up closer to where it would look on the surface as being more workable. But that's for all programs. I mean, that's including CRP, that's including conservation programs, and then whatever emergency aid programs and everything. So that's the total amount. And it always comes slow. I mean, farmers' bills are here today, and they got to be paid. And the government support always has to be calculated and is often delayed. I think Congress, and I noted it at the time, we don't have a farm bill, but they did re-up or reset the program payments in the BBBA, in that big beautiful bill. And so that part is there and is set, and then will kick in.
It's significant.
It can be a significant amount, but you won't get the money for this year's losses until probably October of 2026. So that's a year from now. You'll be planting and harvesting a whole nother crop, and it's probably not going to make you whole. If it was a 1-year deal, okay, if things were normalized and such ever, that's kind of what happened in Trump's first term. But this time, to me, the prospects of normalizing quickly look poor. This stuff with the rare earths is a major issue. And I don't know, China is not liking the tariffs that was put onto it. And this thing has more of a chance of being protracted. And I believe that they can get along without our soybeans if they want to. And do that with basically their investments in Brazil.
Brazilian farmers ask me, wow, you guys are going to get a government payment. That must be nice, because they can't even fathom that. And I say, yeah, I guess it's better than nothing. But, you're going to get $100 an acre payment. I don't know what it is, to cover a $200 an acre loss. And that's just for 1 year. If China doesn't come back, you're going to suffer. These losses are incalculable. And so there's no way to really fathom what that ultimately is. But
well, this is the concluding slide, and what it really represents is some of the imbalance that has happened here, even between commodities. Which is more valuable, a fat steer or a truckload of $4 corn? Well, I'm going to answer the question for you, and this came from one of our clients who sold from Texas, and he's I think maybe he feeds in Kansas, but he sold fat cattle last week. They're all big these days, 1,688-pound steer. And he told me that it brought $4,000, which is what 1,000 bushel load of $4 corn is worth. And so essentially one fat steer is the same value as an entire truckload of corn. You break that down, and I talked about that ribeye steak on that part of it. Most servings now are maybe 8 ounces, and so you maybe cut that in half. But, if you're looking at $18 a pound, that 8 ounces, you can cut that in half, then turn that into a couple bushels of corn. It's almost, if you do the whole works, it's almost 5 bushels of corn for an 8-ounce ribeye steak. And so that's, to me, is an extreme price for beef. And our ability to continue to demand more from the consumer on that level, to be asking for an awful lot. Probably unrealistic anyway. But it struck me when he made that comment, entire truckload of corn is one fat steer right now.
It shows that there's been value and adding value to our grain, in converting it and processing it. And the ethanol is a good example of that. But we all should have been cattle producers, apparently.
I guess so. That too was hard, because one of the reasons why our cattle almost dwindled is we went through a multi-period of years of drought. These herds were liquidated, and they didn't have the ability to turn that around very fast. And so now a higher percentage of our numbers on feed are heifers. And so in order to rebuild the herd, we've got to retain those heifers back into the breeding herd. And here you can actually shorten the beef supply a little further.
Well, where do we go from here?
That's a good question, Matthew. I think what we've been doing is we did put our plans out in this year as far as the crops go. We're corn and soybeans where we are here in Northwest Iowa. And I think we pointed out that one of the ways started with revenue crop insurance and some of the new programs. There are new programs that are being put forth on that can help capture a lot higher percentage of your revenue. That's where it's going to have to start. We did do some hedging. We hope to get some profitability from that as we collect maybe some revenue insurance claims on top of that. Plus, we are dependent on these Trump ACHs, and we're also eventually going to get that ARC or PLC payment on top of it. And so you add it all together, I think that actually a crop farmer, at least where we're at in Northwest Iowa, can find a way out of it. But we're totally depending on the geopolitical situation in the world and how Trump follows through on these things. He says he has our back, and I've always believed that. I think that he does. But what if he's miscalculated here and got in a little too deep in some ways? And I see some scenarios that could get downright ugly yet. And that is with the general situation with the whole economy. The last time we tried this tariff situation was the 1930s, and it slowed the global economy. And to me today, there's $300 trillion worth of debt in the global economy, and our trade situation was what was servicing that debt. And I don't see that these massive tariffs that are being thrown around the world back and forth, essentially they're going to do is slow the world economy. That takes away from capital. Takes away from capital investment if it's all going for tariff revenue. And so I'm not optimistic. I have to say I have been pessimistic, and I've tried to move in a very conservative manner for our clients and stuff. I put together what we called a turtle strategy early in the year. And part of that strategy is I bought silver and gold. I've never really done that before, but I actually bought the silver a couple of years ago, and I bought the gold this last year. And wow, that has been a reward. And that was one of my strategies there too. And so we'll have to look at some protection. I'm thinking that ultimately here we end up with more inflation. And I'm of the belief that at some point in time that commodities will be a beneficiary of that and the weaker dollar. But you got to get through this short-term pain to get to that long-term gain.
All right, David. Well, we cover a lot more of this in depth in our Comstock reports. You can subscribe online at Comstock.com. But thank you, everyone. Have a good day.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.